Okay, so hello guys, welcome back to another session of post-market analysis. I have already done the pre-market analysis for this date. Okay, you guys can check out the video on my channel with the playlist pre-market analysis. Okay, this is the post-market analysis where we see what we anticipated worked out or not. Okay, so let's see what I anticipated at that moment. Okay, see, this is what I anticipated. The market was falling down. Okay, I asked for the market to come back. See, this was the moment around 12:30. I asked for the market to come back. Okay, so now the price started to come back to this change in the structure of delivery. Okay, so I stated that we could anticipate an entry there. Got it? Okay, so now it fell down. Okay, it gave again some kind of change in the structure of delivery. Okay, but it again went up. Let me just delete this. Okay, this is what we anticipated. Can you see, guys, see this arrow, this particular thing? Okay, and let me just take the color yellow. Yellow is not good. Somewhere around like green. White is fine. Okay, yeah, white color is fine. Now this is what I anticipated. Okay, it will come back to this point and it will respect this fair value gap and then it will go down, right? Okay, that's what I anticipated, but actually it went up a little higher than what I expected. Okay, so before the market started, the London session started, it had started rallying downwards. It means before the market will go up, it will start rallying downwards. So that's what it did. Okay, now here we can see the market started rally upwards. Okay, so I don't think we can form any trade in here between, right? After this fall we can anticipate a fall, right? So the fall started somewhere over 430. Okay, and 430 is where, you know, see, this is the point where it reaches change in the structure of delivery, which is around 3:45, right? It means nearly around 4 a.m. Okay, and 5 a.m. New York time the London kill zone ends. Okay, so it is not the time because it is just ending, so it can't give any kind of trade. Okay, so it went up higher, but then you guys can see this particular high was taken out by this high. Okay, and then it fell down, again went up, and then again fell down, right? So the here is we have the change in the structure of delivery, or you can call it as, let me just delete this thing, over anticipated it will go up and then it will come down, right? That's what it did, but it went beyond this fair value gap. You guys can see this, it went beyond this fair value gap to touch this fair value gap, right? But although somehow we are good in predicting the moment. Second thing that didn't happen, it didn't take out these sell stops, and obviously I told you that it is Friday and the sell stops have very less chance of being taken on Fridays. Okay, on the last days of the moment, right? Now it generated what? It generated buy sell liquidities, right? So the market really dipped hard, right? It went back downwards. Okay, so now it went back downwards. Then I told you that somewhere over this point we can anticipate some kind of exit. Okay, guys, so maybe at this point of the low or maybe this point of the low. Obviously this point of the low is not going to be taken, right? It has very less chance because it's Friday, right? So the price again rallied back upwards. Okay, then you guys can see it has, you know, there is a order block and it went through this order block. So obviously the sentiments have been changed, so you should have taken your trade out in that point. Okay, now where's my point? Okay, so it was rallying upward, and in the New York session it started rally downwards. Okay, before the London kill zone, after London kill zone ended nearly around 9:20, in 20 minutes it gave the lowest price. Okay, got it? And this particular EQ is actually equilibrium price. Got it? And I told you that I want the sentiments to remain bearish and I don't want this particular order block to be taken. If you don't know what we are talking about, please go watch the pre-market analysis video of this date. Okay, I have mentioned for every date whichever pre-market analysis I am doing. Okay, now if I go on 15-minute time frame, let's go on 15-minute time frame. This is the structure we could see, right? You guys can see this is what, this is like up close candle in a downward move. It is acting as an order block and trying to keep the price below it. Okay, now this particular high price, it swing away, but you guys can see this particular high. Okay, this bodies are actually closed inside this thing in this order block. Got it? Now if I go on the smaller time frame, you guys can see at this point this is upside order block. Okay, right? You guys can see upside order block, and this is the highest point of the order block, so the price should remain between this to this point. Got it? Let's see if the price did this or not. Okay, so the price should remain between this point, right? But like it should not go above this high. So did the price go above this high? No, the price didn't go above this high. It means the sentiments are still bearish. Okay, so we are still bearish on the sentiments, plus it has been creating more and more sell side liquidities. Okay, so one sell side liquidity, then again first it dipped, then again it went a little bit, and then again it dipped a little bit. Okay, so it has been creating a sell side liquidity. Got it? Okay, so Friday is the end of the session. Now I think the moment it was somewhere in our direction, right, we could have done an entry over at this point. Okay, once this high gets taken, we could anticipate an entry downwards. Okay, and then we could have targeted this high, this particular low. Okay, so now if you would have taken some entry in this point, okay, now suppose this is what the market started falling downwards. On 5:30 it went up, again went down, change in the structure of delivery, went up, went down, now again it went down. It has a fair value gap that has been created, right? You guys can see. Let me just erase everything. Yeah, you guys can see when the market started railing downwards, this particular gap is a fair value gap, right? Now, and with the fair value gap there is a change in the market structure, plus it came back to that point. You should have taken an entry there and put your stop loss at the recent high. For an example, at this point is the safest high. Okay, maybe you should have taken like at this point. Suppose I ask for a bottom price, right? I could have taken my trades at the bottom of this point and high of this trade. See, I'm taking this high. Okay, this high is more confirming and less. It can be ran through a little less. Okay, and I could have put my stop loss at this point. Okay, sorry, my target at this point, because I don't want to think that it will take out this sell stop. Obviously, I told you it's Friday. It's not going to be taken. Okay, that's it. Less confirmation of being taken. So anyway, but we would have raised some 2.66 1 is to 2.66 trade, which is very nice trade, right? Okay, you just have to wait for the trade. That's it. Okay, now that is the trades for the Euro USD. Okay, then what the market did after that? So it went down, it rallied upward with so much momentum, and then it didn't take out that order block. You guys can see on a 5 minute this order block is not taken. If the order block is not taken, it means what? The price is sentiment is still bearish. Okay, so the price started to come down, right? And now we don't care when what the price is doing. We'll just directly go on to the what do you call it? Let me just delete this particular fair value gap, unnecessary. This is also unnecessary. I was wanting the price to come back to this point. Now it came back to this point. It started to show me that it is going up. Then it went down. Then again went up. Got it? Okay. So this particular fair value gap is also not that much of importance. This is the change in structural delivery. It is also not important. Let's delete this. Okay. Equilibrium is somewhere, it is getting respected, but yeah, also it is just a waste of time. Let's delete this. Okay, and this thing is also unnecessary. Let's delete this thing. Okay, and what is this point? This is also unnecessary. Let's also delete this. Okay, now we have some clear price movements, right? Okay, so this particular, I hope so you can see that this is sell side liquidity which was taken, so now it is also not important. Okay, and the sell stops are still maintained. Sell stops are still maintained. You guys can see this. Okay, in the next week we can anticipate that these sell stops are going to be read through, so we will be looking for a bearish trades. Okay, on Monday it can go higher. It has some good chance of like it can have some chance of going higher, not good chance, I'll say. Okay, and let's go on. This EURUSD is done, right? This was the analysis for the day. You could have taken this particular downward entry on the New York kill zone, right? Let's see on GBPUSD what has been done, right? Okay, now you guys can see it has also created one here and one here. This sell stop got taken. Okay, now the price, it didn't rally, it rallied upward, but it didn't reach to this sell side CISD, change in the structure of delivery, as I cannot anticipate any kind of entry to be formed over here. Okay, it went down, took this sell stops. Okay, fine, right, but I cannot form any entry over here. That is the problem. I didn't form any entry, so also I can't start forming my entry at 23:40. Okay, at the midnight around 10:40, because that's not the time. I traded 10:30. Sorry, I traded 2 a.m. and I traded 5:30 a.m. Got it? So it went back again, went back down again, but it didn't take out these lows. So it means now the next drawn liquidity will be this point, and which is an important point. Okay, whenever there are equal lows, mark it up because it's an important point. Any other thing, buy stops are not taken. You guys can see. See, the buy stops are not getting taken on the GBPUSD, but the sell stops are getting taken. Whereas buy stops are getting taken on what? On EURUSD. On EURUSD, buy stops are being taken, but the sell stops are not taken. It means what? GBPUSD has a larger moment of going downwards. EURUSD has not that much moment of going downwards, but yes, we can find SMT for the price confirmation or anything. Let's see if there is any SMT or not. See this particular price swing and this particular pricing, we can find an SMT or not. So here is the SMT from this point to this point. It has rallied upwards, and from this point to this point, here we can find an SMT. You guys can see that, right? So this is the point where you find some SMT, and that is the reason price went higher. Okay, sorry, lower. Got it? Okay, so we have to keep comparing this thing, and that is it for, I guess, the post market session. Okay, post market analysis, that is it for today, and we'll see, we'll try to see for the next trades on Monday. Okay, we'll try to analyze the whole daily bias, weekly bias, and all those things. Till then, that's it for today, guys. Take care. See ya. Bye bye. Have a nice day. And also, let me know your targets. Did you take any entry today? Okay, what kind of entry you took? On what basis? What was your target, stop loss, and everything? Whatever you can. Till then, see ya. Bye bye. Have a nice day. Keep studying. Okay, and keep learning and keep backtesting. Bye bye.